In this short film, I'm going to show you how to invest money and how to double your capital. There are many ways to invest money. Of course, to decide which investment instrument suits you most, you need to know their characteristics and why they may be suitable for a particular investing objective. The first type of investment, bonds. When you purchase a bond, you are lending out your money to a company or government. In return, they agree to give you interest on your money. The most popular bonds in Poland are bank deposits. The main attraction of bonds is the relative safety. If you are buying bonds from a stable government, your investment is virtually guaranteed or risk-free. The safety and stability, however, come at a cost. Because there is little risk, there is a little potential return. So we'll skip this one as we are interested in doubling our capital. The second type are stock investments. When you purchase stocks, you become a part owner of the business. This entitles you to vote at the shareholders' meeting. The second type are stock investments. When you purchase stocks, you become a part owner of the business. This entitles you to vote at the shareholders' meeting and allows you to receive any profits that the company allocates to its owners. These profits are referred to as dividends. Compared to bonds, stocks provide relatively high potential returns. Of course, there is a price for this potential. You must assume the risk of losing some or all of your resources. The best way to double your money is to trade with it. Yes, you can trade with your money. One may say, it's impossible to trade with money. You can pay with it, but not sell it. The answer is simple. Forex. Although it doesn't get as much media attention as the stocks or bonds market, the foreign exchange market, or Forex for short, is the biggest financial market in the world, with over 4 trillion worth of transactions occurring every day. Simply, Forex is the market in which currencies or money are traded. The Forex market allows you to buy and sell money. With the constantly improving technology for trading, dealing in the currencies is now more accessible than ever. Firstly, the market is open 24 hours a day, meaning you can choose when you want to trade, regardless of whether you are early bird or a night owl. There are many tools providing livestock quotations. Recently, it has become very popular to trade on your smartphone. I personally am using Trading 212 app, which you can use everywhere at any time. You can make money whether you are at your office or on vacation. Most people choose to trade at home, having few screens with different bars, and now we have to come to the biggest thing in trading. Let's calculate, shall we? We have 2 directions of chart weight, so it gives us only 50% chance. What gives us advantage? What makes it wise? Let's calculate, shall we? We have 2 directions of chart weight, so it gives us only 50%. What gives us advantage? What makes it wiser than casual hazard game? Trends. Being able to identify trends is one of the most fundamental skills a Forex trader should acquire. The main method of identifying trends is by using moving averages. Moving averages are lagging indicators, which means that they do not predict new trends but confirm trends once they have been established. In general, a stock is deemed to be in uptrend when the price is above moving average and the average is sloping upward. Conversely, a trader will use a price below a downward sloping average to confirm a downtrend. Many traders will only consider holding a long position in an asset when the price is trading above a moving average. So if we are successful traders, how much will we earn? As previously mentioned, another big advantage of Forex trading is leverage. Now let me quickly explain that to you. Leverage uses margin. Margin is borrowed money that is used. Now let me quickly explain that to you. Leverage uses margin. Margin is borrowed money that is used to purchase securities. This practice is referred to as buying on margin. For example, 10 times leverage would create a return of 30% on a 3% yield. For example, 10 times leverage would create a return of 30% on a 3% yield. If you have $1,000 in your account and you have access to 10 times leverage, you'll control $10,000. If you implement our currency carry trade from the example above, you'll earn 3% per year. At the end of the year, you'll earn 3% per year. At the end of the year, your $10,000 investment would equal $10,300 or a $300 gain. Because you only invested $1,000 of your own money, your real return would be 30%, and casual leverage is 100 to 1. So when your currency rises by 3%, you can make up to 300% profit. So even with small capital, you can make big money. In case we want to double our capital, we must forget about safe investments. Big profit always carries big risk. But when we know what we are doing, we minimize losses and maximize profits. And that's how it's done. Thank you for your attention, and I wish you all the best on Forex trading market.